What's going on, everybody? This is Anthony from Market Chart Watch. Today we're going to be talking about retirement once again. And the big thing we're going to be talking about is small cap value as an asset class. So what we're going to do today is we're going to be looking at an actual fund here on Morningstar. We'll be looking at some quilt charts and some data, and ultimately going to show you a graph of why owning small cap value is very much in your interest. So first off, we're going to start with small cap value as a class and what it is. So small cap value, if we take a look at what a fund in small cap value is, it's going to be companies that are small and companies are in the value class. So what this means is these are going to be smaller companies and they are being sold at a premium discount for whatever the reason may be. And so that might mean that the price to earnings is very low, the price to book, price to sales, price to cash flow may be very low compared to their large cap growth, mid cap growth, small cap growth brothers and sisters. And so what does that mean for you as a fund owner or as an asset class owner? So when we look at small cap value as a whole, and we go off of the numerical data and the factor French model, what we can see is over the long-term period, owning small cap value, like for instance here, if we look at a 55-year growth of 10K, small cap value provides the highest rate of return of anything else you could consider, whether that's all S&P 500, a worldwide fund, a four-fund platform, an all-growth platform, a U.S. fund platform, like whatever you decide to do, nothing will beat an all-small cap value portfolio. Now, I'm not going to recommend this, obviously, but what we can do is we can actually look at adding small cap value in with other things. So for instance, if we just did small cap value, 50% weighted and 50% weighted S&P 500, we would retire with $6.5 million with 55-year growth of 10K versus just under $3 million if we just invested in the S&P 500. So it's almost double, okay? Now we can look at another chart and we can scroll down here and see that on average, the U.S. small cap value sector over a 50-year period returned 13.6% return on investment. And the S&P 500 did approximately 10.9 from 1970 to 2024. So over a huge time period. So you can see that is a huge difference. But just for numbers' sake, I took out the highs and lows of this, and that brought this number down to 10.5, and that brought this down to 12.3. So we're going to actually run those numbers and see what our theoretical retirement would be if we put all of our money in the S&P 500 for 30 years. We'll look at retirement 1. Retirement 2, we'll look at if we put all of our money in small cap value. And then the second part of this will be what that accrued over 50 years. And the third part will be what this fund or what our retirement would look like if we actually pulled money out 4% per year in retirement. And let's see what it looks like after 20 years of retirement. So that's what I've got for you here. So here you can see a chart, okay, an investment growth over time. And you can see in the blue, this will be our S&P 500 index fund. And this would be our small cap value fund, okay? And those are noted here as a 10.5% return on investment for the S&P and approximately 12.3 return on investment for small cap value. Keeping in mind that the average of this was actually 13.6, not 12.3, but I took out the highs and the lows of both, okay? So after 30 years of investing just $7,000 a year, I'm assuming this is a Roth IRA account, we would be leaving with basically $1.5 million with the S&P fund, and with the small cap value, we would be at $1.9 million. So just off the bat, for just owning a different asset class, we've improved our return by about 20-ish to 25%. Okay? We've gained an extra $400,000, maybe $415,000 off of this historic chart reference, just using historical data. Now, what's incredible about this is once we retire, we stop putting money in because we're no longer making money. But assume we worked for a county system, or we had a pension, or we were able to live by, working some other small job or a hobby or something. And this money could just sit there and accrue for another decade or 2 decades. Well, that's where this chart comes in. And now you can see where this exponential growth comes in. S&P 500 went from $1.5 to $10 million. That really snowballed. But the S&P, or the small cap value, went from just under 2 million to $18 million. So now we have almost double the amount of money in retirement. Okay. Now, a 50-year time horizon, that sounds like a lot. However, many of us, if we've invested for 25, 30 years, you're still going to have those extra 20 years in retirement. So this is a feasible option. But what's really the most feasible is going to be this chart here on the right. We're going to assume that after we retire, after working for 30 years and saving, we're going to need to start removing 4% per year to live off of, right? We need to take out money in retirement so that we can live, we can pay our bills, we can go on vacations, enjoy life. And so what I did to extrapolate this data was I put this same amount of money in and I left it in the market as you're supposed to do in retirement. But every year we pulled out 4% of the earnings every year of what we had. And we did that for 20 years. And so basically, it's basically going to be this account subtracting 4% per year for 20 years, if that makes sense. And what ends up happening is, because our return on investment is greater than the amount of money we're taking out, our retirement still improves year after year after year after year. And what you can see is, yes, our S&P 500 still has $4.7 million, but our small cap value fund has double that. Okay, so what small cap value does for you is it really improves your return on investment on the long scale time horizon. Now I'm talking 2 decades plus, okay? We're talking 2 to 3 decades is where you're really going to see the improvement in the small cap value asset class index. And so you can really see that, and it really paints this picture in the broad scope of things here. Now, the problem with small cap value is it gets a bad rap sheet because everybody lives in the here and the now. Small cap value will not always outperform. In fact, on the short-term scale, it's going to be much more volatile than an S&P 500 index fund. However, on these long-term 30, 40, and 50-year time periods, what you actually find is the risk premium is reduced based on the fact that you have purchased at a lower premium itself. So the return on investment itself decreases the amount of risk premium you're obtaining when you buy it. So I know that really doesn't make sense, but just think that this asset class can be more volatile on the small scale, but because on the long scale it's more volatile and it's always going higher and higher at a higher rate, that means that there is less risk premium involved. Okay, so that's what I wanted to talk about today, is the fact that small cap value is just such a great asset to own because of these numbers here. Now, if you told anyone which one would you like to retire on, the odds are you're going to say, I want the green, I want the green, I want the green, I want the green. Okay. Now, the reality of this is that you're not going to own all small cap value, because most of these funds will own about 100 funds or less. And so Something that you'd want to look into is weighting how much of this small cap value you want to put in your portfolio, because it does have a track record of outperforming on the multi-decade time period. So whether you want 10% of it, or you want 100% of it, or 50% of it, or 25% of it, that is ultimately going to be up to you. But there's tons of data out there for you to look at to make that determination on your own. Anyways, this is one of my favorite funds here, the Avantis US Small Cap Value ETF. Now, its expense ratio is a bit higher than other ETF level stuff like from Vanguard, but the return on investment here over a shorter time period really outweighs that taxable premium that you're putting into the fund. Okay. Now, there are, like I said, many others in this class. You just have to look to see what's best for you. And I'll be highlighting some of those here in the near future. But just keep in mind that small class value is a great asset class to own. And we'll talk more about in future videos why owning small and value can really help to leverage that portfolio and tilt it in the direction of return on investment. Anyways, it's been another video from Anthony here at Market Chart Watch. Like, share, and subscribe. And we'll see you in the next video.